Hello and welcome back to our channel Polar Vega. Today we shall speak about trend and tools that establish strength and direction of trend. But before we go on to our slides, we'll first look at disclaimer/disclosure clause. Disclaimer/disclosure. The contents of this presentation are for information purposes only. The material has been obtained or derived from sources believed to be accurate, but we do not guarantee its accuracy. The presentation is the 18th of a series of interactive videos aimed at educating our viewers about basics of trading and investment. Now we shall define trend. Trend can be defined as a general movement or time of a statistically detectable change with a statistical curve representing such a change. One can also call it a line of general direction or movement. It's overall direction of a market or an asset's price. In technical analysis, trends are identified by trend lines or price action that highlight when the price is making higher lows and higher highs for an uptrend and lower highs and lower lows for a downtrend. Having defined trend, we shall now find out ways to establish trend. Although we have numerous statistical tools to determine the strength and direction of trend, the simplest way to establish direction and strength of trend is to see the troughs and crests and the difference between the size of impulse and correction waves. Simplest way to establish an uptrend is to establish a sequence of higher low followed by a higher high, and a downtrend is characterized by lower high followed by a lower low. In an uptrend, the impulse forms the distance between the higher low and the higher high, while the correction forms the distance between the higher high and the next higher low. In both directions, the larger the difference between the size of the impulse and correction wave, the stronger is the trend. The strength of trend is as important as the direction of trend, as it helps in making decisions while entering and exiting trades. In technical analysis, we have lots of statistical tools that allow us to identify trends. Use of technical indicators to analyze trends and formulate trend trading strategies. Moving averages. When a short-term moving average crosses a long-term moving average in the upward direction, it's taken as an indication to go long. And if it goes below the long-term moving average, it's an indication to go short. Moving average convergence/divergence, or the MACD. MACD line is generated by subtracting the 26-period EMA from 12-period EMA, which is the exponential moving average. A 9-period EMA of the MACD line is called the signal line, and it prompts the trader to go long when MACD line crosses above the signal line and goes short when it crosses below. RSI, or Relative Strength Index. RSI measures the strength of the momentum, and traders are advised to go long when the strength is high and go short when the momentum is weak. RSI above 70% is high and below 30% is low. Trend lines and chart patterns. Trend lines are used to trail a long or short position with a stop loss, so that if the trend reverses, the stop loss is triggered and the position is closed for a profit. We shall look at some more statistical tools to identify trends. More tools/indicators analyze trends and formulate trend trading strategies. Stochastic oscillator. This compares the security's closing price to the price range over a given period. It's based on the idea that the momentum change precedes the price change. In other words, in an uptrend, it'll close near the high, and in a downtrend, it'll close near the low. Above 80% is an overbought condition, and below 20% is an oversold condition. Average Directional Index, or the ADX. The ADX line is used in conjunction with two other lines, minus DI and plus DI. Directional Indicator. The ADX is the average of a plus DI and minus DI, which are calculated from the comparison of two consecutive highs and two respective lows, using the HER, or the average true range. It compares the difference of the price range of the current candle with the previous 13 candles. ADX rises when the price momentum rises. Since volatility is very high in downtrend, sometimes ADX will move up as the price moves down. Commodity Channel Index or CCI. CCI compares the price of the asset to the moving average and then to the mean deviation. CCI is used to get a breakout signal and change of trend. When it moves between -100 and +100, it's sideways, while a breakout above +100 is an indication of the continuation of an uptrend, and a break below -100 is the beginning of a downtrend. Most important of all, we should not use indicators if we do not know how to use them. Also, we need to personally backtest or demo test the indicators before we decide to use them. As we know that we use historical data to statistically project the future on the basis of past behavior. We may not always be right, as the market inherently follows a random pattern based on the behavior of all the participants at a given time. Having done various kinds of tools to identify trends and ways and means to follow trend, we should now look at curve or the bend or beginning of the end of trend. While it's always safe to trade with a trend and avoid going counter trend as far as practicable, it's extremely important to notice the signals of change in trend. Curve or the bend at the end of trend is as important as the signals of a continued trend. We notice these areas around pivots on higher time frames, but when we see the price action break out of all existing pivots and establish all-time highs or lows, then it's advisable to wait and watch a seller's area form at highs and a buyer's area form at lows before we decide to take a long or a short trade. We've now reached the end of our video where we spoke about trend, change of trend, and the beginning/end of trend. However, there's much more to trade in than just know about the entry exit points and the trend that we need to ascertain before we enter a trade. In our next video, we shall talk about enhancers that improve our chances of getting into profitable trades. If you liked our video, please give us a thumbs up and press the button underneath to subscribe to our channel Polo Vega and watch all our videos. You may also visit us at our website www.polovega.com or get in touch with us at your handle @polovega. Until next, please keep saving, keep investing, and keep getting wealthier. We thank you for watching our video. Please like, share, and subscribe to our channel Polo Vega.